Another update. In today's update, we're going to be taking a look at the PulseChain ecosystem today. So let's go ahead and take a look at the PulseChain ecosystem. We're going to be diving into the bullish and the bearish scenarios that I see here going forward. And so we're going to first start with PulseX. Okay. Now PulseX, you can see that we had a 5-wave move to the upside for your A wave. And then for your B wave, which is this wave over here, we were just forming a pennant, right? And the pennant is in the form of an ABCDE, so it's a triangle pattern, and every single wave subdivides into 3, right? So 3 down in your A, 3 up in your B, 3 down in your C, 3 up in your D, and then 3 down in your E, right? And then this is our 5-wave move to the upside to signal that this was the start of our impulse to the upside, and our correction completed on March 31st. Now all we're doing is simply coming down for a wave 2 correction, right? We're just above the 70.2% fib. We could come down to the 786 or the 88.6% fib over here. Okay, so any of these levels right here would be a great DCA opportunity if this is a wave 2. Now once this bottoms out over here, then we would be coming up for a wave 3, 4, and 5, and so forth. Okay, now this is the bullish scenario, right? The bullish scenario states that we don't have much downside left. In fact, we've actually completed the correction on March 31st, and then we're just coming down for a minor correction for a wave 2 before we have continuation to the upside. These red fibs over here would be the conservative targets, and then these white fibs would be the little more aggressive targets, found by taking a fib from the peak of the range down to the lowest recorded price, so down to the trough, on the linear and on the log. Okay. So now I'm going to show you the bearish scenario on PulseX. The bearish scenario, instead of taking a look at this from a logarithmic perspective, we're going to just flip to the linear chart. Okay. Now I know a lot of people who say don't take a look at the linear, but you'd be surprised how well the linear chart works in crypto, right? And let's take a look at this objectively, rather than subjectively. Like rather than, just because we have a stake in the ecosystem, let's try our best not to be biased here and just see what's been happening since December 2024. We've just been making lower highs here, right? So it doesn't have to stop at these fibs over here. What if it just, let's go on the 4-hour here. What if it comes down here like this, and this is your 1, 2, 3, 4, and then you come down for a 5 and sweep your March 30th low right here like that. And then if you take a look at this on the daily time frame, you can see that it would be perfect. It would be totally normal if we did that. Like it wouldn't be considered like absolute, like it wouldn't be considered a rug pull. Like it would just simply be coming down to the September 2023 lows. So you see this base over here in September 2023, like around here, we would just be coming and tapping into that zone. Right over here like this. Okay? And you can see we can just connect the lines like this, and you see how it just connects perfectly? Right? So this is a falling wedge, a bullish falling wedge in a triangle pattern like this. Right? So we'd come down like this, tap into this low, consolidate here, and during this consolidation, during this consolidation here, that's when people give up, right? Because from here, from the peak over here on December 2024 down to this low, be about an 84% drop, okay? You may even go a little bit lower, but remember, I'm showing you the bearish scenario here. So that would be price-based capitulation, and then we would consolidate here at the lows. That would be time-based capitulation, and then that's when we have the markup phase. Maybe when they cut the rates, like in July, August, September, maybe in the later summer months, like in the later half of the year. But this is the bearish scenario, so just take this with a grain of salt, but definitely be prepared. It wouldn't hurt to have a little bit of cash on the side, just in case this scenario plays out. But so far, this is not our base case. Okay, our base case would be that this is simply just a B wave triangle. Okay, it's just a B wave triangle, and we're due for our C wave pump to the upside. Okay, now taking a look here at incentive token, we can see over here that it does look like we had a pump today, but the pump just came up to the 200 EMA. Let me check this out. Yeah, it just came up to the 200-day moving average right there. So it was a fake pump today, and then we retracted back into the falling wedge range. We actually hit the 50% fib here. That 50% fib was found by taking a fib from this low on December 2023 up to this high in March. So we had our 5-wave move to the upside for your A wave. Then you have your 5-wave move down in your A, 3-wave move up in your B, and then for your C wave, which is the last wave in the correction, would be what's considered an ending diagonal. So notice how the waves are overlapping each other and they're subdividing into 3. So we would come down like this to the 786 to sweep the March 31st low towards 76 cent. Worst case, absolute worst case scenario, it comes down to the 88.6% fib at 55 cent. That would be wouldn't be considered like bearish on the macro, because you'd just be tapping into this wave 1 high formed in December 2023. Okay, wouldn't be bearish at all. Just consider it like a shakeout. But in order to invalidate lower, what we would want to see here going forward is just a daily close back above $1.93, and that's the 50% fib when you take a fib from this low up to this high. Now there's something I wanted to show you on PulseChain before I go any further. Let's just delete this here. Let's go on the linear scale, and if you take a fib, we're gonna place this fib a little bit differently. We're gonna take it from the March 31st low up to this high over here on February 11th. And you see how the price ever since has been reacting perfectly as support and resistance to these fibs. Rejection off the 618, bounce at the 786, rejection off the 50, have continuation up to the 38.2, reject off the 38.2, reject off the 618, reject off it again, and then we come down, take out this low. Okay, there is a possibility of that. So I just wanted to show you how well these fibs are working in the ecosystem. Works pretty good. But yeah, if we get a daily close above $1.93 on incentive token, then we'd be looking at these higher targets right here at 10.53, 16.35, 25, and 42. But we'll definitely analyze the price once the time comes. But so far we are still trending down, and today was just a fake out towards the 200-day. Let's go ahead and take a look at PLS. So this is PLS over here. As you guys can see, this is clearly Wyckoff accumulation. We have price-based capitulation going down by over 94% from peak to trough. And then we also have time-based capitulation being in this range for over 743 days. This is an example of what Wyckoff accumulation looks like. This is Wyckoff accumulation schematic number 1. And all we're doing over here is just coming down to finish up this C wave toward any of these fibs right here. Toward any of these fibs. And then we'll see the bounce. Now I want to show you the more bearish scenario, the worst case scenario in PLS. Okay. So instead of placing all of this fancy Wyckoff analysis on the chart, just take a look at it on the linear scale. Okay. And what is the price doing since December? It's forming lower highs. Okay. It's forming lower highs, and what if price comes down here, or even like right here is where I'm thinking for the bearish scenario. Right? You could do this you can do it like that. Okay, now if you take a fib from this low in September 2024 up to this high in December 2024, look where we reject off of. Now the way I'm placing this fib, it's not the conventional way to place it. It's just a different way, and I can dive more into that in the Discord. But notice how we came up here, rejected off the 886, then came up one more time, rejected off the 786, and now we're seeing continuation down. Okay, so what if PLS comes down like that to what's that price there? I think it's 5075, and you sweep the March 30th low like that, and you actually make a new low. But it would just be considered your ending move. So let me remove this. So actually no, we'll keep it. So you can either bounce from here. Let me put this price label on the chart right there, or it comes down here and then bounces right there. Or sorry, not in the negative territory. It would come like right over here. You see? Like around this area. Around this area, but that's still pretty low. Like that's still below the August 2023 low. And then we would consolidate, and then we would come up from there. Okay? That makes this on the linear scale, it's definitely a possibility, especially if Bitcoin nukes from here towards 97, 96, maybe even 93. There's a possibility that the PLS ecosystem makes a new low, but don't get me wrong, I'm still bullish on this ecosystem, and this is not my base case. My base case is that this is just simply Wyckoff accumulation, and we're coming down for an AVC correction, and we're finishing up this C wave down to any of these fibs over here. So I showed you PulseX, I showed you the base case and the bearish scenario, PLS, incentive token, and I want to show you pHEX before I end this video. So we'll take a look at pHEX here. So this is hex, pHEX, and I actually see only one scenario on this, and it's that we come down. Well, I can show you the bullish scenario. The bullish scenario would state that this perfect higher low structure holds. Right? You see how perfect this trend line is? Every time we come down to it, we bounce, right? But usually perfect trend lines in crypto and in all markets, they tend to get broken, right? That's what they're made for. That would be considered your trend line liquidity. So in a perfect world, this would hold and we would have continuation up, right? And then this would be considered like the Livermore speculative chart play, where you have kind of like a broadening bottom pattern or a megaphone pattern, and this is your low right here, and then we have continuation up. That's if Bitcoin and ETH don't nuke, okay? However, if Bitcoin and ETH nuke, then we're looking at this just being a channel within a bullish descending broadening wedge, and then we would come down to these lows here on September 2024. Taking a look at this on the linear scale, you can see that this price action is even more explosive because this is a falling wedge. Do you guys see? This is simply just a falling wedge structure. Okay, and you'd come down like this to this right here, like that, and then you'd actually sweep this psychological low. You'd sweep the psychological low, and then you'd bottom out here, consolidate, and then it's likely we would see a move. We would likely see a move up to these range highs, where there's clearly a sell wall, right? Every single time we come up to these highs, the price gets knocked down, right? Boom, 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 right? And that's just the composite operator, or in other words, the hidden hand, the market maker, buying into weakness, buying at demand zone, and then selling their bags into strength in order for them to accumulate more coins and to absorb the supply, right? This is how they absorb the supply. They create the range, right? They create the lows and they create the highs, right? This is how they absorb the supply. This is how they take the supply off the market, by selling into the advance and then buying into the trough. So what if we come down to this level right here, take out the September 2024 lows, and then bottom out here, and then we move up to that demand zone, or sorry, the supply zone. And from around, let's just say like you bought in like right here, like right midway through this fall, be looking at a 10x, right? If you bought down here, you'd be looking at a 93x. Do you guys see? So buying this fear, it wouldn't be a bad thing in my perspective, not financial advice. And then you'd want to look to take profit all the way up here if you end up buying this low, right? You can just scale out, scale out, scale out, scale out, and then sell everything here. Not financial advice. Keep some coins aside, because if we do come up here, we're likely to see range expansion, likely to see a move down to the 618, and then have continuation for range expansion, right? To the expansion targets sitting right over here. 1.618, 2.618, 3.618, and 4.236 extension. So we're likely to come up here, and then you may see a tap of this level as support, have a push up to the 2.618, maybe even the 3.618, and then come back down for your bear market. But I'm looking at this target to get hit. And now these are the targets if we don't go below the March 31st low, okay? These are the targets if we do come down to over here. So you just have to see where we come down to, right? And then you just take a fib from this high here in December down to wherever this bottoms out at to get these targets. So these targets they're definitely going to change, right? We need to see where this bottoms out at first, right? So all I would want to see here, going forward is just a push. Let me see here. In order to invalidate more downside, what we would need to see here going forward is a push above this level right here. I'll show you guys. Just a push, simply just a push above this falling wedge. And a push back above the 23.6% fib on the daily at 0.0085. Then we'll be like, oh, okay, this is just an ascending broadening wedge. Or, sorry, a broadening bottom pattern, megaphone pattern, and then we're going to have continuation up. Right? So right now the chart is looking weak. There's no doubt about that. Right? We are still trending down below all of the EMAs. Okay, we're currently below all of the EMAs, and today we actually backtested the 20 EMA here. So just be mindful of both scenarios, right? Where we can go up now, right? But it wouldn't be a bad thing to have some cash on the side. Not financial advice, just in case we do come down. And if we do come down, then consider it as an opportunity, because I think that if we do have another flush in the altcoin space, especially in the PulseChain ecosystem, considering how much these holders have been through, it's likely going to be the last dump. Okay, the last dump before the markup phase. So I hope you guys enjoyed the video. If you guys love the content, then click the link in the description below to join the Discord, where you can get access to over 350 assets, PulseChain updates. You guys can connect with me one-on-one. And yeah, peace out. Take it easy. See you guys in the next one.